Hey guys, welcome back. I have the one and only Jason Burack from Wall Street for Main Street on the line. Jason's a wonderful guest because he's kind-hearted enough to send me a list of bullet points that he thinks we should talk about. And you know what? I don't generally get that from too many of my guests. It takes a lot of time to prep, and Jason does a lot of prep. He's a smart guy. Jason, welcome back.
Thanks, Sean. I'm glad to be back.
Hey, it's good to have you. You know, I want to talk about the SGE and some of these other things, China's gold, some of the things on your list. But first, I want to start with your thoughts on peak corruption. What's happened here with the DNC and the mainstream media and Hillary Clinton all colluding to prop her up is probably the single best example, Jason, that encompasses everything that we talk about at SGT Report that I can even imagine. I don't think there's a better example of the peak corruption in our society and in our government and in our media than what has occurred here with this epic collusion. And as you know, Jason, and I pointed out, Hillary Clinton is Rothschild's choice for president, which is why they held a $100,000 per head fundraiser for her. Your thoughts on this epic moment of peak corruption?
Well, first of all, Sean, the Clinton Cash documentary is now out for free on YouTube. So it's about an hour long. I recommend your listeners go and watch the documentary. Send it to your Democrat friends, your mothers, your wife, your sisters, people, your friends who are women who still believe in Hillary. Send it to her and see what they think. See if they have an open mind and they're willing to challenge themselves. Because I hear a lot of let's say, excuses for Hillary Clinton still. I see it on Facebook from a lot of women. Oh, it's not really a scandal with this Democratic News emails and stuff. Well, it is. It's an enormous scandal. Look, the American people right now, a lot of them, the ones who are not awake, obviously, Sean, you, me, and the listeners who are listening to this podcast are awake. But the people who are not awake, they still believe in the system. They still believe, the current global economy can be fixed. A few tweaks here or there, things can be fixed. The things cannot be fixed. There's just way too many problems, and a lot of the problems are corruption. American people have, the Santa Claus and Disney view of the American political system and politicians and things like that with our political process. If you talk to someone in other countries, you realize how corrupt the political system is and politicians are. It's been that way for a long time. People are a lot more realistic about the political process than many Americans are. And, for an example, there's studies about this for corruption. And a couple decades ago, the U.S. wasn't viewed as the political system and the economy as an enormously corrupt country. People had a lot more faith in it. Now the U.S. is top 5, and it's been that way for a decade. So things have changed drastically. I think, this scandal with Clinton and the Democratic, I'm not surprised. The Democrats have been enormously corrupt. And yet, there's all these academics, all these people with 2 or 3 degrees, master's degrees, PhD degrees, who will make excuses for the Democrats. So it's just very frustrating for me that, people just try to blame, it's the Republicans' fault or things like that. No. There's just so much corruption, whether it's Democratic Party, Republican Party. The really large thing, though, is the Clinton Foundation, okay? It's even larger than this email scandal. So I think that's one of the major reasons why, Sean, that Hillary wasn't charged in, the email server scandal and this other scandal is the Clinton Foundation is fully global. It's enormously large, and there's a lot of billionaires and other heads of state in other countries that were involved in this. So the Clinton Foundation was so large that, they're protecting her.
Yeah, and Clinton Cash is a documentary that is an absolute must-see. We posted it and stickied it at the top of SGT Report the other day, and absolutely, it lays it all out. You've interviewed Charles Ortel, as I have, after being inspired by your conversation with him. He has dug deep into what's going on at the Clinton Foundation, and it's hundreds of millions of dollars of corruption and theft, and these people seem to be able to get away with anything, and the media and these corrupt politicians and these corrupt parties collude to put the puppets in power. And I'm going to just read this from Dave Kranzler, love Dave, over at Investment Research Dynamics. U.S. corrupt money, corrupt system. It looks like the Democratic Convention is getting off to a disastrous start after it was revealed that Democratic leaders, including DNC Chairman Debbie Wasserman Schultz, along with, make no mistake about this, Hillary Clinton, conspired, with the mainstream media to smear Bernie Sanders and perpetrated the civil unrest disruptions at Trump campaign rallies. Guys, this is the playbook. They just repeat it time and time again. It's just that they rarely ever get caught in black and white. In this case, they have been by WikiLeaks. And I guess one last thing on this, Jason. Bernie's corrupt too. I mean, he campaigned saying that Hillary's unfit for office, which is true, and then he turns around and endorses her.
Exactly. Well, welcome to dystopia, Sean. I mean, we're finding out about the truth now because of the internet and programs like yours and what I try to do on programs like mine. And there's a lot of sources of people and real investigative journalists online, not the mainstream media that's not really doing any investigative journalism. But yeah, I think the system is just so inherently corrupt. Bernie Sanders actually, like he was talking, he does all these populist speeches about the 1%. Bernie Sanders was making, as a congressman, over $200,000 a year and only paying 13% taxes. And he was demanding people who make the same income brackets as him in the private sector pay, 50, 60% income taxes. So he's just a total hypocrite too. He's going to end up, probably with a position in the Hillary Clinton cabinet or administration. Debbie Wasserman Schultz, the former head of the Democratic National Committee, if Hillary doesn't win the election, she'll probably end up with a soft landing with a job at the Clinton Foundation. So, I mean, this is just part of the disgusting revolving door of DC politics and lobbying and things like that. And this is the type of corruption you have when you get big government and large corporations. I mean, these large corporations would be fighting just to stay alive if they didn't have big government protecting them in so many government agencies. They would have to innovate and they'd have to be more efficient instead of spending tens of millions of dollars, if not more, bribing politicians and also spending money for lobbyists on K Street.
All right, well, let's turn our attention to the corrupt economic system globally. RBS warns clients they may face negative interest rates. In another reminder that monetary unorthodoxy in the face of NERP is coming to a savings account near you, RBS Group has warned 1.3 million customers they could be charged negative interest rates if the Bank of England cuts base rates below zero. As seen in their letter, the bank warned global interest rates remain at very low levels and in some markets are currently negative. Dependent on future market conditions, this could result in us charging on credit balances, end quote. Jason, we've been warning for a very long time. The playbook is to do bail-ins. The playbook is to take the people's money, even their savings account. I don't think this is going to end anytime soon, is it?
I think we're in the final stages of the end game of Keynesian economics. I mean, Keynesian economics should have died in the 1970s with the Phillips curve because the Phillips curve said that high inflation and high unemployment or stagflation or underemployment could not occur at the same time. So that should have been the end of Keynesian economics because it was totally discredited by then. The problem is, academics want to keep promoting the theory. Big government loves Keynesian economics in many different forms. Oh, it's not pure Keynesian. Oh, it's neo-Keynesian. You know what? It's still derived from Keynesian economics, which is derived from mercantilism. What I would say, though, is the policy stuff. Like you mentioned some of the things that they're talking about doing. They're talking about nationalizing Deutsche Bank. They're talking about splitting it up. They're talking about going after pension funds, bail-ins, bailouts. The ECB, I just looked up on the European Central Bank website to look more about their asset purchase program. They're doing 80 billion euros per month. The Bank of England, right after Brexit vote, announced that, our banks have passed stress tests and they're well capitalized after the 2008 financial crisis, but we still need to inject 250 billion pounds in case of an emergency, but it's not really an emergency because the banks are well capitalized. This is just ridiculous, Sean. We're getting to the point here where even mainstream people, money managers on Wall Street who don't look at the world the way you and me do, even they're starting to scratch their heads and say, wait a second, after 2009 financial crisis, I thought a couple of years later, I thought the economy was doing well. And if the economy was doing well, I thought they were going to raise rates. And I thought we were going to stop all these crazy, low financial repression and lower interest rates and asset purchase programs and all that. Why are we going to negative rates then? So more people in the mainstream financial media, mainstream money managers, so the people on Wall Street, they're starting to realize with their own money, insurance managers, if you're getting a negative interest rate and most of your portfolio as an insurance company or a money manager is in bond funds, you're getting screwed bad. So the California pension fund was supposed to produce, I think, 8% per year returns so the teachers could retire eventually. It produced not even 1%. With low interest rates and, volatile markets and things like that. So I think we're getting to, like I said, the Keynesian endgame at the epilogue of the general theory in Keynes, and a lot of people who defend Keynes won't agree with this, but it's there, black and white. He talks about euthanizing the rentier and ending capitalism and how to do it. And he says one of the best ways is to just basically keep lowering interest rates lower and lower and lower, and forcing those savers so they can't get any return on their investment. They can't, retire comfortably off an interest rate if they've done the right thing and saved. So this is the stage, and make capital, which is supposed to be scarce, is supposed to be efficient, so people have to work hard and save and invest and do the right thing, supposed to make it plentiful. So Keynes put in a prescription there for how to end capitalism and transfer wealth to big government and crony capitalists and things like that. So I think these are the stages we're going. One thing I want your listeners to take away, though, Sean, is that the policy things are going to get crazier and crazier and crazier. It's going to get theater of the absurd, Twilight Zone type policy decisions. We've seen this in Japan. Maybe we'll talk about that later in the interview. But the policy decisions that are going on are just insane. And if your listeners really want a taste of what's to come, go and read the full transcript from Ben Bernanke's 2002 helicopter speech. Sean, maybe you can link to that. Ben Bernanke said, look, we can stop deflation basically, within an hour. All we have to do is, as a central bank, we can start buying stocks. We can buy entire companies. We can buy entire industries. And if those things don't work, all we have to do then, and we don't want to do this, but we can, and it'll stop deflation immediately, is just do what FDR did in 1933. Just start buying lots of physical gold and devalue our currencies against gold.
Huh. Well, you know what, Jason? I think it was Kyle Bass himself who said that is the playbook, and I think that's where they're headed. I mean, they've obviously been buying the stocks. And let me ask you this. I want your thoughts on precious metals and mining stocks. What I've come to realize here as we watch the GDX and the GDXJ and these, the mining sector explode, bounce back from this past 5-year bear market, I've come to understand, Jason, that a lot of the Wall Street money is going into precious metal stocks and precious metals related assets because they can't buy physical gold. Willem Middelkoop made it very clear in an interview that I've been posting recently, I've been using snippets of it, that pension fund managers are not allowed to buy physical precious metals, so they have to buy gold and related gold assets, paper assets.
Pension funds are not allowed to buy physical gold. I'm a fund manager myself. Within the permits we have, we're not allowed to invest in physical gold, only in financial products connected to gold.
And there is nearly $25 trillion in U.S. retirement assets and pensions out there. What is your take on the precious metals mining sector? Do you think we're going to continue to see this bull run?
Yes, but there's going to be a lot of volatility, though. So people who are just chasing these things higher and higher, they got to be very careful. They have to accumulate on dips. There's ways to hedge themselves and protect themselves with their trades, either with options or inverse ETFs or things like that. So things are not going to go straight up. The volatility is going to really hurt some people who don't have a lot of experience in markets. So people need to be very careful with that. But you brought up a very interesting point with Willem Middelkoop and what he was saying. And that is the gold market is really small and tiny compared to many other markets. So basically all the gold mining stocks, if you combine the market caps of basically every single gold mining stock, it wouldn't even really equal one large company like Johnson & Johnson. It might barely equal it. I think it's a little bit smaller. Last time I checked, I think Johnson & Johnson was around $300 billion market cap. And all the gold mining stocks in the world are not near there. Now, if you added up all the physical gold that governments and private sector says it has, it would be more than Johnson & Johnson. But on a relative basis, though, that's a tiny amount. Look how much capital is sloshing around total, Sean. We have over $30 trillion in liquidity that's been printed since the 2009 collapse just to prevent markets from crashing, each day. That's the total amount of liquidity, but we don't know the real amount. So we know at least 30 trillion due to the Ron Paul audit of the Federal Reserve and what Jim Rickards says, but it could be a lot more than 30 trillion that they printed since 2008.
Yeah, I was just going to jump in and back you up there. Middelkoop said in that same interview, and this is where I should have been pounding the table for listeners to be buying the mining stocks. He said at the low of the bear market in gold stocks back there at the end of 2015, Apple could have bought up all of the world's gold companies, all of the mining companies, with just their cash balance position. That's how low the market cap was of all the world's gold miners. They've been beaten up that badly. All right, let's turn our attention to gold in China. One of your points here you wanted to talk about was that according to first half 2016 Shanghai Gold Exchange data, China imported only 972 tons of physical gold. I don't know, man, but almost 1,000 tons. That's a lot. But you say that's a lower pace than 2013, 14, and 15. Jason, why do you think China is importing a lot of physical gold but less physical gold than in these past years?
There's two main reasons for that. First of all, the past paces for China, they were buying up 100% or more of the annual global gold mining production. So China was taking all of it for themselves. So that doesn't count Russia.
Which is about 3,000 tons, right, globally?
About 2,500 tons. If you add in the Chinese physical production, it would be more than that. But China actually doesn't let any of the physical gold mined in China leave the country. The Chinese private sector and also the Chinese government buys all the physical gold mined in China. It doesn't leave the country. So you can't really count that number because they don't let it leave. But I think the two main key points to take away is that China is now facing stiff competition for more physical gold. And I'm not saying that when I talk about the physical gold market, you're not saying, oh, Jason's wrong because I can go to my coin shop and I can buy a monster box of silver eagles, or I can buy a couple gold coins, or I can buy one gold bar, so Jason's wrong. No. I'm talking about tonnage. So if you want to buy 1 ton of gold or 5 tons or 10 tons or 20 tons, there's multiple counterparties now that want this. 3-4 years ago, China, the Russian central bank, India. There wasn't a lot of people that wanted that physical gold. There was a handful of people that were buying it. It was mostly foreign central banks. Now that the chart is better for gold, you have the Western people in Europe, in the United States, in the Western countries that buy gold. They don't like buying normally when the price is down. In the West, they like chasing the price higher. So now you have people back in the market again, buying physical gold and mining stocks and things like that. The other thing about the gold market, the point I wanted to make, the reason China has slowed its physical purchases, besides the fact there's more stiff competition for gold in tonnage, is that China tends to not chase the price higher for commodities. You see this in a lot of their other purchases for commodities. Chinese speculators and Chinese long-term investors who like to buy commodities, they tend to buy when things are hated, when there's blood on the streets. So they were accumulating oil, during the 2008 collapse. They were buying, locking in oil from Russia and also from Brazil on long-term contracts above the spot price when the oil price had crashed. They're going to look to buy, agriculture assets when there was a bear market the last few years, and oil assets and things like that. So now that the gold price has gone a little bit higher, that type of buyer in the Chinese market is not buying as much. So they're waiting for a pullback. So there will be demand again, in more increased demand again in China for more physical gold, but they're waiting for another pullback. So I think there's a lot of people in the market, whether it's Wall Street money managers or Chinese speculators who were buying the last few years during the bear market, they're waiting for another pullback to keep accumulating positions.
Well, before we move off this, I want to ask your opinion about the SGE versus the COMEX and the LBMA. Maybe you've seen that site. Has the system collapsed yet? I love that there's a spread now between the trading on the SGE for gold and silver and the paper garbage coming out of the COMEX and the LBMA. Do you believe that spread will grow in the near future as the web bots are predicting, and we're going to see gold and silver actually break out and trade more freely? I guess the question is this, is a simpler question even. Do you believe that the bankers are losing their ability to manipulate the prices of gold and silver? I think they'd love to have gold below 1,200. They'd certainly love to have silver back down at 15. Is the SGE keeping these guys honest to some degree? Are they losing control of their ability to manipulate, Jason?
Yes, and also the miners who haven't really increased, brought on new mines. So when we were at 1075 gold in US dollars and around 13 silver, that was at a point where mines were very close to shutting down. Primary gold miners, primary silver miners. We're still at a copper price where if the copper price crashes, even with higher gold and silver prices, that a lot of byproduct gold and silver, especially byproduct silver, could come off the market. That could be, Sean, in the next 3 to 4 years, that could be a good solid 20 or 30% of the entire annual physical silver supply could come offline if enough copper miners shut down mines or go bankrupt. So we're in a situation where the physical market is changing. I don't know if the manipulators have totally lost control. I still think they can, knock the things down and they can delay things for a while. They're in like managed retreat mode. So they do fight battles. Can they knock, physical gold down to $1,000 or lower? Maybe, temporarily, but then the mines would shut down and there would be no physical supply at all. So we would be in a situation where it would be like one of the shortest corrections in the gold market's history. The same thing for the silver market, probably even worse physical problems for silver. But look at the Japanese market now, Sean. We see now that Japan's going to have a physical gold contract, and that's because of crazy stuff going on with the Bank of Japan and, crazy movements in the Japanese yen, and demand for physical gold in Japan's increasing. So we're starting to see more commodities exchanges set up physical contracts. The one thing about the Shanghai Gold Exchange is we do see a lot of the Wall Street bankers moving over to Asia, whether it's JP Morgan setting up vaults in Singapore. We do see these guys starting to see that that's where the demand's going, even though they won't talk about the Shanghai Gold Exchange numbers in public. The World Gold Council and the Wall Street investment banks won't name the real Shanghai Gold Exchange withdrawal numbers in public. They won't talk about it as if that's the real numbers. So I think there may be an attempt for some gains in the Shanghai Gold Exchange. Obviously, right now, it's a lot more of a physical gold exchange, but they are looking to gain more market share and add more paper trading to that. So my hope is that they don't do too much paper trading on the Shanghai Gold Exchange and things like that. But the future, my crystal ball is kind of broken though. So, as of right now, that's a lot more of a physical exchange, and it is hurting the ability to do as much paper manipulation. And there's also strong physical demand. But we don't know if the Shanghai Gold Exchange is going to go to a large fractional reserve market. Obviously, I think Wall Street's going to try to attempt to do that. Maybe even China will attempt to do that at some point. They hold a lot of control of the gold. They may want to keep the gold and silver price down just a little bit longer so they can keep manipulating more and more and more at lower and lower prices. We know that at least China knew of the manipulation from GATA for years, and they may have been involved in the manipulation in different types of things just so that way they can acquire more physical gold and silver at cheaper prices.
All right. Well, our guest David Jensen wrote an article recently about the LBMA, the implosion of the LBMA, and noted that what's going on at the LBMA is not due to Brexit. The run on the physical at the LBMA and the bullion banks is not due to Brexit. So let's talk briefly about Brexit. One of your line items you wanted to discuss, you mentioned that the Bank of England issued a PR statement on June 24th, right after the Brexit vote, about injecting emergency liquidity of 250 billion British pounds into their banking system. Jason, why did the mainstream financial media ignore this? And do you think it's related to the European banking system collapse, which is imminent?
Yes, I think it's related to the European banking system collapse. But I think, Sean, that Brexit's going to be the new excuse. The mainstream financial media, a lot of corporations, then when they report earnings, when revenues are bad, they don't meet analyst expectations. When earnings don't meet analyst expectations, they tend to look for excuses to blame. So in the past, I don't know if you're aware, but they would blame, it was Superstorm Sandy. It was bad weather. It was these thunderstorms in certain areas. That's why the consumer didn't come out to the shopping mall. The weather was too good. There's always an excuse with these corporations why they didn't meet the revenue earnings. Not because the economy is bad and consumers don't have full-time high-paying jobs and because they don't have savings or discretionary income anymore. There would always be, this new excuse du jour. I think Brexit is this new excuse du jour that they are going to blame, even though it's not the real cause. It's just a symptom of the real problem, which is, central banking in general, fractional reserve banking, debt-based fiat currencies, big government spending like crazy on welfare warfare states and things like that. So I think in terms of the European central banking, what they're doing, I talked earlier in the interview, I looked it up for you guys. It's 80 billion euros per month asset purchase program. This is just the stated number. So they're running, propaganda videos. We saw this on Zero Hedge a month or two ago about the European trading room, the trading room in the European Central Bank. The Bank of England claims to have injected 250 billion pounds immediately after the Brexit vote. Obviously, I think these are on the over-the-counter derivatives market. There may have been currency bets on there in the derivatives market on the British pound. The British pound moved so much during that time span that some derivatives bets on currencies could have went bad very, very quickly. The other thing is the negative interest rates. There's over $12 trillion in negative interest rates. These are not helping the banks at all because the scam that's going on, it's been going on for a while, Sean, is that one of the banks and the large banks, large investment banks on Wall Street and in Europe and other areas, they have this large incestuous relationship with their governments, where they are the first and last buyers of resort before the central banks monetize the debt and give the banks cash. So the banks hold a lot of government debt on their balance sheet in exchange for the governments letting the banks do basically whatever they want and not prosecuting them. So I think, these, with the European banking crisis, I mean, there's so many bubbles blowing up. We have the low oil price and the shale boom going bust. We have this subprime auto loan bubble. There was a warning from a government agency about the subprime auto loan bubble going bad. We have one of the largest subprime auto loan lenders needing emergency capital. We have State Farm Insurance, who is actually now getting into the auto loan business, even though they only sold car insurance. So I think that's a head scratcher there. It's kind of like, GE Capital or Ford, like the auto companies, and GE getting into weird financing. I think that's a big red flag. The bubble's coming. I think all of this leads to the fact that, before the housing bubble collapsed, we had 10 government agencies regulating the housing industry, and none of them were able to stop the housing bubble. So we have the European banks who were not as well capitalized as the American banks after the 2008 crisis, even though the PR statements are claiming they are. And there's the ECB purchase and this credit line, and the credit line from the Bank of England. And I think, the Federal Reserve is going to have to come in with currency swaps. They probably already are. Maybe we'll see a press release saying the Federal Reserve has put out emergency liquidity lines for the ECB or specific banks or things like that. I know they're debating announcing results for an ECB stress test soon to try to lie to people and prove the banks are doing well. But, so many of the loans in these banks are going bad, whether it's Banco Santander that has subprime auto loan bubble exposure, enormous amount of it. They also have bad loans to South American consumers, and that's going bad because of low commodity prices. A lot of their middle class in South America was dependent on higher oil prices and high base metal prices, and those infrastructure jobs and things were based on, exporting lots of commodities to China, and now that's going in reverse. So a lot of these European banks, I think the next banking crisis, and there's a lot of potential banking crises all over the world, whether it's Japan or China. It looks like it's going to start in Europe unless the Federal Reserve potentially steps in with a currency swap, large currency swap. But, if you add up the numbers from the ECB asset purchase program, that's 80 billion euros per month. That's an enormous sum. You add in the Bank of England sum. These are just what they say in the press releases. So obviously, I think this is not transparent. I don't think those are the real numbers. I think the crisis is much larger than that.
Yeah, it's just what they'll admit to publicly. It gives them cover to do whatever they want, really. They say, we're going to print, and they print much more than they'd even claim publicly. All right, well, let's bridge to a related question. And guys, with credit to Jason on this one, too, this one's really above my pay grade. Enormous intervention by one or more plunge protection team groups to protect bank stocks from collapsing further and the VIX from spiking. This is coming from James Rickards, who says more than $30 trillion in currency swaps and liquidity have been injected into the global financial system. Is that figure correct? $30 trillion? What are we talking about here?
Well, that's only an estimate. There's no way to prove it, but James Rickards' educated guess is probably better than most others. So we do know that from the Ron Paul one-time partial audit of the Federal Reserve that there was over $16 trillion implemented just in 2008. And if you go back and add up the asset purchase programs and the QE programs and all these different programs, it's, trillions of dollars more. I mean, the Fed is still reinvesting money, even though it's not doing increasing amounts of QE, it's still reinvesting interest from those treasuries back into buying things. So they're still buying stuff. People are just not talking about it anymore. So the 30 trillion would include additional amounts of liquidity injections, whether that's from Fukushima. The U.S. had to help Japan out. Japan had to sell some of their currencies, but the U.S. also had to do currency swaps with Japan to help them rebuild after Fukushima. So there's a lot of other hidden things in there going on. There's just no transparency. It's opaque. It's totally covert. But the thing is with the manipulation, I did a video on this on the Wall Street from Main Street YouTube channel. I don't know if you saw it. It was 3 weeks ago talking about the European banking crisis. I was going through all the different stories of the European banks and all the different crazy policy decisions that they're discussing and leaking it out there, testing in trial balloons what type of policy ideas they should do. But I was looking at charts of Deutsche Bank, and normally, Sean, I don't know if you trade stocks, but normally if a stock crashes, it takes, weeks or months for the chart to repair, for the chart to get a bottom, for people to be, the old saying on Wall Street is you don't want to catch a falling knife. So people normally, if a stock chart crashes like that, people won't want to come in and buy it really. But on the Deutsche Bank chart, you look at the 1 or 2 year chart on the Deutsche Bank chart. Deutsche Bank was in free fall, the shares were. And basically there was an enormous V shape. You should show this to your listeners. It was a V shape. I could send you the link afterwards on the chart and highlight it. And this is just extremely rare in finance. In a free market without as much manipulation, without, plunge protection team, exchange stabilization fund, any of these groups going in there, European Central Bank, Federal Reserve, any of these guys buying, that type of chart would never happen. It just doesn't. It would not happen. People would wait for the chart to come at the bottom, but it has a V shape. So it's basically an intraday turnaround where the stock was totally crashing in free fall, total drop. And then all of a sudden it's an enormously powerful buying pattern to make a V. You just don't see that in a 1 or 2 day span. It's in normal, regular finance, it just doesn't happen. So we are seeing evidence of this in charts. Dave Kranzler wrote an article about manipulation of the VIX. I think what we're seeing, though, Sean, is certain sectors. So certain stock market indices like the S&P 500, the Dow, certain bank stocks, certain bank indexes, bank stock ETFs and things like that. These things are protected. But certain individual companies, so restaurants, the analogy I used is, well, the plunge protection team will protect the general stock market indices or certain banks or banking indices, but they'll let the Olive Garden fail. I think we're seeing a lot of regular companies on Main Street post bad earnings and the stocks are crashing, but certain protected industries that spend more lobbying dollars, those stock prices are being protected for a bunch of different reasons. So the evidence of stock market manipulation is now in the charts, is pretty blatant to a trained eye, someone who's been a financial professional in trading markets. These are things that you don't see in non-manipulated markets.
All right. Well, let's cruise through these last couple. We've got about 7 or 8 minutes left, and I don't want to skip this question about Japan because, as you know, I've covered it a lot with Andy Hoffman, who predicts that Japan will be the world's first world economy to hit hyperinflation. So here's the question. Helicopter Ben visited Japan to help Abe and Kuroda implement their helicopter money plan. And what's being discussed is 10 trillion yen, but now Zero Hedge is reporting it's going to be 20 trillion yen. But as you've noted, Jason, and David Jensen and I have talked about, Japan is also starting to deal with physical gold at the TOCOM. What's going on in Japan? Are they really going to print 20 trillion yen and force themselves into a hyperinflationary scenario?
It's bipolar. They're acting like politicians now, so they're totally flip-flopping now. They're doing total bipolar behavior. It's just unbelievable what they've decided to do. I think they're realizing, these academics, these PhD economists at the Bank of Japan, which is Japan's central bank, I think they realize they're trapped. And no matter what they do, Sean, they're totally screwed.
Yeah. Yeah.
I think that's why. Because look, in 10 days, 10 to 14 days, they went from saying that they were going to do a 10 trillion yen helicopter money drop with Ben Bernanke there. Then they started leaking it on Zero Hedge reported a couple days later, 20 trillion yen, then not at all.
Jason, well, let me just jump in and let me ask you about this, because I wonder if what's going on in Japan isn't what's going on in China and Russia, as these nations wake up to the epic criminality of the Rothschild, Rockefeller, Federal Reserve, central banking scam. And on one hand, they're saying, sure, we're going to print 10 or 20 trillion yen, but then behind the scenes, they're like, if we do that, we seal our fate. We're doomed. Let's embrace the physical gold. I wonder if what's going on is they're talking out of both sides of their mouth, just trying to placate the criminal bankers that control the United States government. Your thoughts?
Yeah, I'm sure that's what they're doing. First of all, Sean, if you're a Japanese citizen, I wouldn't want to be holding Japanese yen with all these crazy currency fluctuations, with how the yen was strengthening and now what they're talking about doing it. The Japanese yen is going to do something very stupid. We don't know exactly what they're going to do very stupid in the next couple months, but the Japanese central bank is going to do something, and it's going to make things even worse going forward. First of all, the Japanese citizens, they should go open up a BitGold account. They should have have physical gold and silver to protect themselves. But yeah, Japan's in a really bad situation. After World War II, they basically became a protectorate of the United States. They were forced to pay tribute to the U.S. They had to support the U.S. Treasury market. They're basically still one of the protectorates of the U.S. Same thing with Western Europe. Although, these countries have been trying to get themselves away from it, at least to a little bit, but the U.S. has its hooks digged in very deep. So it's not going to be as easy for them to get, their monetary independence. I think they're worried, Sean, also about financial warfare that the U.S. and the banks can implement. So with these high-frequency trading computers, in a day or two, a week or two, they could attack the currency of these countries up or down. They can attack the banks. They can attack the bond markets of these countries. They can do a lot of different things. I think the method of choice going forward, at least in the near term, before any physical war, we're going to see enormous amounts of cyber warfare and financial warfare in markets, of countries attacking each other's currencies or stock markets, either with hacking or with high-frequency trading computer algorithms, knocking key markets up or down that would hurt key people in those countries. So I think that's only going to go exponential going forward. This is just something that people are going to have to protect themselves with. Obviously, if you own physical gold or silver outside of the computerized financial system, you have more protection for that. But, there's other risks with that. So I think, that's why Japan can't fully get themselves out of the system is, Japan doesn't have their own full military. Things are going to get crazy in terms of the financial warfare and economic warfare going forward.
Well, let's wrap up by coming full circle. We started talking about Clinton corruption and the epic theft happening at the Clinton Foundation, which you and I and Charles Ortel have talked about in detail. We're really talking about billions of dollars missing. Just in the case of the Haiti funds alone, the poor folks in Haiti starving to death after that earthquake, and all this money being raised and none of it getting to the people, Jason. This woman, Hillary Clinton, and her evil husband, Bill Clinton, should both be in prison. And I think there's precedent for it, is there not? Tell us about Congresswoman Corrine Brown.
Okay, so Corrine Brown was just totally convicted of many, many counts, hundreds of counts of wire fraud, solicitation, and she also created a fake charity. She is a Democratic congresswoman out of Florida. She had been in Congress for a long time. She had created this fake charity where she was going to help poor kids learn education and stuff like that. And her aide just pocketed all the money. She was going on expensive vacations. She was going to fancy restaurants. None of the money was going where it was supposed to. And the reason I compare her to Hillary Clinton is, she created a fake charity. She only stole $800,000 though. So the Clinton Foundation is orders of magnitude larger. If you believe Charles Ortel, and I do believe Charles, because Charles saw that the banking system was in peril prior to 2008. He saw that General Motors had phony accounting prior to 2008 and was going to need a bailout. Charles also saw that General Electric was using bad accounting, and General Electric was in trouble with their GE Capital prior to 2008. So Charles saw this. He's a forensic accountant. He's a great value investor. He knows a lot about accounting. He's made a lot of money investing and trading on Wall Street. So he knows how to read financial statements. And the stuff he's told me about the Clinton Foundation, it's just, he thinks it's over $100 billion in money going in and out and them not paying taxes. Well, Corrine Brown actually did what Hillary Clinton and Bill Clinton are doing at the Clinton Foundation. It just wasn't as large. But Corrine Brown is facing up to 300 years in prison for creating a fake charity and wire fraud and solicitation and all these charges that Hillary Clinton should be getting. Hillary Clinton, if Corrine Brown is getting that much, Hillary Clinton should be getting more than 300 years in prison. So, this is just a total hypocrisy of the system. Certain people on the lower parts, they'll throw a bone for certain congressmen. So if you're a lower congressman and you're committing fraud or you get caught taking a bribe, they'll prosecute you to the fullest extent of the law just to pretend to the American public that, look at the great job that all these government agencies are doing to, get these cheating, evil, corrupt, hypocritical Congress people out of office. But yet, they let the even bigger criminals go without a slap on the wrist. And this goes back to, the whole argument of what's going to fix the problems that we have. And a lot of people that aren't awake yet are still saying that, more government regulation, Glass-Steagall would have stopped the 2008 financial crisis. I hear this on the mainstream media, Sean, all the time, that Glass-Steagall would have stopped it. No, it wouldn't have. the derivatives market exploded in the 1970s and 1980s, the over-the-counter derivatives, long before Glass-Steagall was fully repealed in 1999 by Bill Clinton and Robert Rubin and Larry Summers and all these other scumbags. So, and before the 2008 housing crisis, I said this earlier in the interview, there were 10 government agencies in charge of regulating housing, and none of them did anything close to trying to stop the subprime or housing bubble from, oh, you can't give out these loans, oh, you can't create these mortgage-backed securities, or collateralized debt obligations, or credit default swaps, or any of these things. There was not a huge, Brooksley Born obviously did try, but none of the housing regulating agencies really did try much of anything. So I think we're at a situation here where people just need to understand that they have to protect themselves and their families and their friends, and they're not going to get the help from government, even if we install, tens of thousands of more government employees and government agencies, and we give them, hundreds of billions of dollars more in budgets. It's not going to stop any of the stuff. It's only going to make things worse.
Well, absolutely, and we'll wrap it up with this. Corrine Brown will do time because she's not Rothschild's choice. She's not part of the big club, the big Federal Reserve central banking club, Jason. And as you know, the Clintons get a pass for all their criminality because Hillary Clinton is literally Rothschild's choice for president. And Jason, it's my opinion that those who still want to vote for that evil woman simply don't understand these facts. And if they don't understand who Rothschild is and why Hillary is Rothschild's pick, then they have no business voting in November. We've turned into a banana republic, and I can't believe there's so many people still cheering as it happens and cheering the very puppets who have turned our country into this banana republic. Guys, our guest has been the very bright Jason Burack. Jason, please tell people about your website and your YouTube channel.
Sure. They can go to the Wall Street from Main Street website and sign up for our email list. Occasionally, we release an annual report talking about investments and markets and things like that. That one's free. But we also do sell paid research reports occasionally. wallstreetformainstreet.com, WLSTFORMEINST.com. On the Wall Street from Main Street YouTube channel, we interview a lot of excellent guests. I also do short videos about investing in markets and current events and news stories I see. And we have our Gallows Humor show with Eric Dubin of the News Doctors called Welcome to Dystopia. Instead of crying about all the things that are going on right now, Sean, I would rather just educate people about what's really going on and have a good laugh about it instead.
Yeah, sometimes we have to laugh just to keep from crying. Thanks so much for your time. We really appreciate it.
You're welcome, Sean, and I am excited to come back on again soon.
Yeah, we'll schedule that as soon as we get off here. And guys, thank you so much for your time. We really appreciate you clicking like if you liked it. Share it with your friends, family, and colleagues. There's another line item on here we didn't talk about, and it's the fact that Social Security is broke. There's a storm coming, and so many of the people that you love in your daily life have no idea. Tune into sgtreport.com daily for real news and information. We really do appreciate your support. Have a terrific week ahead. God bless.